Hey traders, Jason here from Leavitt Brothers. Oil has been getting crushed lately. It hit a new high in early October and has been all downhill since then. Here's the chart. It's a weekly chart going back to the early 2016. The rally off the 2016 bottom lasted, over 2 years, 2.5 years. Rallied off of a low, traded in a range for about a year, then rallied again. But the show is now over. It has taken out a support level. It has taken out a support level here, traded below its 50-day moving average, traded below its 200-day moving average. Right now it's down a little bit more. It's not shown in this weekly chart. Oil stocks, which are much more sensitive than crude itself, are down even more. Okay, so when oil rallies 20-30%, several stocks will rally 100% or more. Unfortunately, the opposite is also true. When oil drops 25%, many stocks get cut in half or even worse. Let me go through some of these big losers just to kind of point out some of the damage that's been done in the oil space. CLR moved up, broke out. This was a multi-year high, obviously gotten crushed, fell from 72 down to 42. It's down $30 in just over 2 months. CRC broke out from a long-term base at 25, rallied all the way up to the mid-40s, came down to the mid-20s to test that breakout level, rallied all the way back up to a new high, and since then is down in the teens now. So it's down from $48 to 18. It's down $30, more than half. CRZO topped before oil, if you remember. Oil was testing its highs over here in like early October. So CRZO had already rolled over, so it was weak, and it just continued down. I mean, just in the last 2 months, it's gotten cut in half. Devon, same thing. It had rolled over before oil did, getting capped by its 50-day moving average. It's continued down. It's fallen from the 40s down to the 20s. FANG, which has been one of the higher quality stocks, rallied up, traded in a big range, broke out to an all-time high just at the beginning of October, and since then has just gotten crushed. WLL rolled up and down for many years. Obviously, it formed a big top here, broke down, and has fallen from 55 down to 25, so it's gotten cut in half. Okay. Gush, it's the leveraged oil ETF. It's one of the oil ETFs. It has fallen from the mid-30s down to single digits. It's under $10 now. Of course, it's not all bad. Here's Drip. It's the opposite of Gush. Okay, it has rallied from 5 up into the teens. Even if you didn't get in at the low, which you're never going to do that. If you got in at like 7 or 8 or 9, you still pretty much doubled your money. Okay, but the purpose of this video isn't to preach to the choir. You guys know this. You know oil has gotten hit, and many oil stocks have just gotten clobbered. The purpose of this video is to show you what happened the last time oil bottomed. Okay, here's the chart again. Okay, here was oil going back a couple of years. It topped in 2013, 2014, up near over $100. You can draw a trend line here, right where the 200-day moving average is. Took out the trend line, took out the 200, trended down for a while, obviously about a year and a half, fell from over $100 a share down to like basically the mid-20s. Okay, and here's what happened afterwards. Okay, you can see the bottom here in early 2016. That bottom of 2016 is right here, so oil has rallied really well. Hasn't rallied all the way back to 100, but it still did really, really well. Okay, it moved up, started to get cupped by its 50, lost it, ended up just trading in a range, and then it legged up again. But still, a move from the mid 20s to the mid 70s. That's a 3x return, or 3x move, I should say. Not bad. Okay, many individual stocks. We've played many individual stocks at Leavitt Brothers during this time. Okay, we've played dozens of them on and off for a couple of years and have made a lot of money. Okay, let me show you a couple. Just to give you examples of what happened when oil did bottom. Here, CRC, I told you that it had formed a long, a big, I'll just do this, a big base underneath resistance here on the weekly chart. Going back several years, it broke out, and went from mid-20s up to close to 50, so it almost doubled. Okay, nice base, got cupped here by the 50 and then moved up again. Here's EC. I don't even have to draw a trend line here. It's pretty obvious. This is it's a big winner for us. We had it based for a while, broke out at $10 and rallied huge all the way up to close to 30. ECA, a good example of a stock that it didn't steadily trend up for 2.5 years, but you got to move from like $3 up to 13, and then it just flattened out in a huge, somewhat volatile range. But still, you had a lot of money to be made before it settled into the range. ERF steadily trended up, was one of our plays. It's on our list a couple times. WLL, I already mentioned, it rolled up and down. There were several moves. I mean, the oil bottomed here 2016. WLL went from 15 up to 50. It dropped back down, went from the mid-20s back up to 50, dropped back down, and went from the teens back up into the 50s. So there's several opportunities to play it. CPE, another example of a stock that hasn't done anything lately. Okay, it's been dead money for the last 2 years, and recently I think it's now down at like $7. This chart is like almost 2 months old. It's down at $7, but still, I mean, it went from $5 up to like 15, 16, so it was a triple. Okay, so again, here is oil. Okay, so the point I'm trying to make here is when oil did this, there were a lot of companies that went bankrupt. There were some companies that their stocks dropped and they ended up getting acquired. For the companies that survived, most of them did extremely well. I mean, doubling and tripling was like fairly common, and some of them did even better than that. Okay, I don't know when oil is going to bottom, and I don't know where it's going to bottom, but when it bottoms, there will be a lot of money to be made. Okay, many stocks will rally 200%, 100%, 200%. Some will do even better. Okay, don't fight the market. Okay, instead of being amazed and wowed at the movement, like holy cow, look what oil's doing, you should sit back and like literally salivate at the opportunities that are coming. Okay. Again, I don't know where oil is going to bottom, but when it comes, there are going to be some huge winners to be had. Here's another example. Last chart is just Gush. When oil did bottom over here in 2016, this is just a leverage ETF if you don't want to play individual names. It rallied 462%, bottom to top. There was another 156% rally, and then there was another 187% rally. Okay, so if oil continues down, instead of being like, holy cow, look what's happening, you should be like, yes, there's going to be some big opportunities. And if you don't want to play individual stocks, you can just throw your money into an ETF like Gush. Okay, thanks for listening. If you liked the video and want me to do more, give it a like and share it with your trading friends. You can also subscribe to the channel right here at YouTube. Come check us out at Leavitt Brothers, where we provide market analysis and trading ideas to individual and institutional investors and traders. Again, thanks for listening, and I'll see you next time.